welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the sign in the charts that says that the next stop for Bitcoin is 74,000. I'll also be doing a deep insight into the 60-day cycle and to see exactly what this cycle is telling us and have we bottomed out for the end of this cycle and the beginning of the next one. And as per usual, we'll have a look at what's going on in the background of Bitcoin that's driving the price. So we'll have a look at the ETFs, we'll have a look at the wider markets, and we'll also try and have a look at the strategy of what's the best thing to do. And I'll also share with you what I'm doing in terms of my strategy. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always do your wider research before you make any investment decisions or any swing trade decisions. So what is this sign in the chart that is saying that we are going to be more than likely, remember this is a game of probabilities, not certainties, no guarantees, but a game of probabilities where the chart says the next stop will probably be 74,000. Okay, so we topped out here at exactly 73,747. And since then, we've had a 17% correction. And in Monday's video, I gave you this level here at the top of these candles, that this is a likely place for the price to come back to and to bounce from. And the second target was down here at these levels. So these were our two targets, but because we haven't had more than a 20% correction, but this seemed like an unlikely destination for Bitcoin. And then on Wednesday, we had this green candle close, this candle here. And the information that I elicit from this candle that the price for Bitcoin is highly unlikely to get down here. No guarantees. Because of this candle, we are unlikely, less probable, not 100%, less probable to be testing in the next few days. So why do I say that? This candle is known as a bullish engulfing outside bar candle. So we have the body of the green candle being greater than the body of the previous candle, and the whole of the red candle here is engulfed by the whole of the green candle, including the wicks. So what's so special about that, I hear you say? So as I said, this is a bullish engulfing candlestick. What that's telling us is that the buyers are fully in charge of the market. And that's following a bearish trend that we've just had with a 17% correction. And this engulfing candle usually appears in a downtrend. And if we scroll a little bit lower, we'll know exactly what this really means. These patterns are most effective when they appear after a downtrend, as this is a shift in the market sentiment from bearish to bullish. And it goes on to say that the pattern occurs after a downtrend, and that suggests that the bears have lost control and that the bulls are taking over, which can lead to a trend reversal. So this is what it really means, a trend reversal. So what are the facts in terms of the probability that this will play out? The theoretical performance here is that this bullish reversal occurs about 63% of the time. So it's a 60-40. So what we can expect with this bullish engulfing candle is to test these levels at the first, which is a 69,000. And the strength of this green candle means that more than likely we're going to come and retest this level here at 74,000. So let's see what happens. But this is where the probability is now, rather than for the price to go further down. I'm going to move on to what's in the news in the background, which is more than likely going to be driving Bitcoin to much higher levels over the next few months. So this article broke 2 days ago where the Japanese pension fund, which has $1.5 trillion, is exploring diversifying into Bitcoin. And they've already announced that they will be exploring the diversification of a portion of its portfolio into Bitcoin. So those people who think that the ETFs are going to be going away after the initial enthusiasm may care to have a look at what's going on around the world. We already have the Brazilian ETF that came on board a few weeks ago. And this is the BlackRock's Spot Bitcoin ETF, which started trading in Brazil from the beginning of the month. And we also have other countries like Hong Kong, a lot of European countries, etc., with the intention to pass legislation to start trading in Bitcoin ETFs. And our good friend Michael Saylor of MicroStrategy now holds 1% of the Bitcoin's total supply after the latest purchase, which was 9,245 Bitcoins for $623 million in cash. So the total they now hold is 214,246. And when you consider that his long-term held view is to never sell his Bitcoin, you can see that this supply that he is buying up time and time again to increase this holding is not going to come back anytime soon anyway onto the actual exchanges. So this supply is going to be not available, which is only going to drive the price of Bitcoin higher. And if you're wondering why the price of Bitcoin has gone down over the last week or so, when we look at the Bitcoin ETF overview here, the Grayscale Bitcoin Trust has actually this time around in the last 7 days sold more than BlackRock has been able to buy up. And obviously there are other sellers in the background who thought that 73,000 for Bitcoin was a very good price for them to realize their profit. But as we can see with Fidelity and many of the other ETFs here, there's still a lot of positive buying going on in the background. So the ETFs are not going away and the demand is more than likely to continue. And we can see with the net inflows of the ETFs, on the 18th, 19th and 20th, we've had net outflows of minus 2.25, minus 4,000 and minus 4,000. So the pressure to the downside has been there and reflected in the Bitcoin price. So there you have it. There seems to be still a lot of demand. So in the short term, we've had an outflow from the ETFs as being reflected in the price, but the long-term view says that we are still very bullish for the market to go up, driven by the ETFs. And if we have a look at the wider markets, there's only one place to start, and that's the dollar. Yesterday, the FOMC meeting concluded that the Fed will now keep the interest rates on hold. And this was taken positively by the markets, as we had a red candle on the dollar here. And I showed you in last Monday's video that the dollar had lost the 8 EMA, this blue averages line, and we were finding resistance at that point. And I pointed out the possibility that we could get above the 8 EMA for a short period of time, up to the 61.8 level at 104 before getting rejected. So if you do the Fibonacci retracement to the 61.8, you can see that it came right at the 61.8 before being rejected. And currently we've got this gravestone doji candle, which obviously has the last day of trading session today. It will be like this gravestone doji candle, which we called out at the time, that this has an incredible bearish pressure and we're more than likely going to fall down further, which is exactly what we did. So if we close with this gravestone doji candle, there's only one direction the probability is to the downside. And this is a 30 minutes chart for the dollar, and 6 o'clock UK time, this is the candle that brought the dollar down further. So as soon as the announcement was made to keep the interest rates on hold, the anticipation up to that point then was accelerated by the announcement, as you can see down here, all the way down to 103.17. So we've just had a dead cat bounce, and this looks like heading to the downside. And we can see with the SPX here, at exactly the same time, they started rallying to the upside. And certainly, if you look at the 60-day cycle view of the SPX, what we were expecting at this point for a decline into the 60-day cycle, what the pause in the interest rates has done is actually to give even more strength to the SPX to the upside. But certainly, sooner or later, we are going to get some sort of a pause to the downside into the 60-day cycle. And it's anybody's guess at the moment, with the strength of the SPX being displayed quite clearly here. And moving on to the Russell 2000, as expected, we are bouncing off that neckline at around 2000. With this green candle and the long wick that is now creating here. So all expectations are to break this level here and then move to the upside. So once again, the small caps looking quite bullish in the short term. And moving on to gold, the charts have been telling us that we're going to be starting to move away from this neckline that we've had here all along at around about the 2100 level. So the current weekly candle here is making new all-time highs, as you can see. And with this candle so far, we've got an outside bar bullish engulfing candle, just like the one on the Bitcoin. But this is at the top of a trend, and that is a sign of a continuation of the uptrend. But certainly for the next 12 months, I do see gold prices going much, much higher. And our measure has to be from this point to the neckline of around about a 30% increase. And that would take it to 2,700. So this would be one of the targets here now for the next few months, which brings us nicely to the 60-day cycle for Bitcoin. And as we were expecting that somewhere along this line, we are going to get some sort of a 60-day cycle correction. And the end of the cycle would have been about the 23rd of March. And what we've got from this bottom cycle here is that we're currently on day 58 And yesterday we got that turnaround. So it could well be that the 60-day cycle has bottomed out at day 57. And the first sign of the confirmation will be at the tops of these wicks here at 69,000. So once we get above that, that will be our clue that this is now the bottom of the cycle, and that we've now started a new cycle to the upside. And of course, the actual confirmation will be once we break the 74,000. So my observations here are that we've had quite a healthy 17% correction down to these levels here at 60,000. And what it does is it resets the stochastic RSI here on the daily chart and resets some of the other indicators as well for the opportunity to go further up in the next cycle. And this chart tells you everything you need to know why leverage trading during a bull market phase is quite futile. Because as we can see with this liquidations heat map, the yellow lines here are the liquidation strongholds, and at the bottom here, and you can see that the price is coming to those points to take out the stops and liquidate people. And this is one of the reasons why we will always get these 10, 15 and 20% corrections in order to take out these leverage positions. So based on that, if you don't have a long-term portfolio, then you may well have to be prepared to be stopped out very frequently. So the strategy really here, the best strategy that I can think of, and obviously this is not financial advice, I'm just sharing with you my thoughts of what I'm doing and what my observations tell me, and that is that the long-term portfolio holders should just hold tight and just ride the pullbacks. And the logic behind that is that if you started buying Bitcoin at any point round here and ridden all these pullbacks along the way, then you would have captured all of this move until now. And with that in mind, we have the rest of the parabolic bull market still to play. And we know that the best gains are usually occurring after going above the previous all-time high. So this is the next part of that capturing of the largest move in this bull market. And as I showed you with that heat map of the liquidations, it doesn't seem to make sense to try and time the market for the bottoms and the tops, because you will get liquidated all along the way here. And it's always better in a parabolic part of the bull market to try and capture all of the move by just sitting tight and not doing anything. Most of the money in the stock market, as I've said many times before, is made by doing nothing and sitting tight. And we can see on the monthly chart here, this is looking incredibly bullish and resembles what happened here in 2020 and 2021. A similar feature is forming at this point. But this is much more bullish because we're coming up to the previous all-time high. So the bullish momentum is much stronger this time around than it was in the previous 3 cycles. And if we move on to the weekly chart, the 8 EMA, once again, we've got support just virtually on that line here. So the price, since we broke up here back in September, we've been finding support on the 8 EMA continuously. And once again, we've been able to get support around that level. So certainly the monthly and the weekly charts looking very bullish. The daily 60-day cycle is looking like it's turning around. And we've shown you the outside bar engulfing candle, which is bullish as well, where we can elicit the information that we've more than likely, with a higher probability, have now turned around. And this long wick at the bottom here, given by this current weekly candle, this is not closed until Sunday, of course, but this is certainly giving us another amount of information that the buyers have stepped in and taken control for a potential move to the upside here. Only time will tell. I can only read what's going on in the charts and give you that information. What you do with it is up to you. The main thing for me is that there is the importance of the psychology involved in all this. And patience is the key. Need to always have a long-term strategy with proper goals and proper objectives. And my advice to myself is not to lose sight of this goal here. Wherever this is going to be, I've only just marked it for visual purposes. And we're expecting this bull market to end around about the end of 2024 from where we are here. And we expect some sort of a move like this. So the goal is to reach there, and the objective along the way is to be determined and disciplined to ride out these little corrections that we get along the way. And certainly in the next few months, we're going to get some more of these corrections. But unfortunately, many people got shaken out by the current correction of only 17%. And my strategy is always that whenever you get the dips, these are your buying opportunities, not to be shaken out. So whenever you get these little dips, as I mentioned in the last video, it doesn't really pay to wait to get in at these levels. It's better to dollar cost average in, so you could easily get at least one position at these points when it was coming down over the last few days. The main thing is, as long as you believe in the bull market narrative, that we are in this bull market here, and the parabolic move is going to take that line much more steeper into this type of area over the next few months. And as long as you've got that narrative, then these dips here are there for the taking in terms of buying the dips. And this is the strategy of the long-term portfolio that we've been following with the private members, which focuses just on the Bitcoin miners. And we got in early and we got in hard at the beginning of the bull market at the end of 2022 and early 2023. So we started this portfolio here on the 6th of January 2023 with around $100,000, which ended at the end of 2023 at $434,000. And the big correction I mentioned in Monday's video, we are now down 19% this year so far, and this poses an incredible opportunity for a leverage play with the Bitcoin miners. So the current value of the passive portfolio is $352,000, which seems a million miles away from, but we also have our trading portfolio where we've been using the swing trades and the ratio trades. And as a result of that, instead of the passive portfolio here showing a 19% decline, the trading portfolio is showing plus 6% at the end of play on 19th of March. And our target for the end of this bull market is $5 million. Now that may seem very stretched, but what we know with the Bitcoin miners is that we can expect some incredible performances. And even if we get to 4 million or 3 million or 2 million, it will definitely be well worth sorting out a portfolio where you're doing very little and just sitting out and watching the price go up. So this is what we're expecting over the next few months. And in the last couple of weeks, we've done a few ratio trades in order to reposition our portfolio to be in the best pole position to ride out the rest of the bull market. And this was yesterday's members video, which we do on Wednesdays and Fridays, to reposition our portfolio with our ratio trades. Now, I don't want to give the impression that trading and investing is easy, because it isn't, but the idea is to actually ride the best high potential miners for the rest of the bull market. And as you've seen from the portfolio, it's been incredibly successful. And it's our business in the private member section to look for these ratio trades on an ongoing basis. And whenever they occur, we will be doing them in our favor to increase positions without the added risk. If you want to join the opportunity with the miners and you want to have access to the 2 videos that we do every week, as well as the daily market updates for reviews and news on the Bitcoin miners, it's a very simple approach of simply focusing on extracting the most amount of value from the Bitcoin miners. If you want to join us, all you have to do is click the join button here, or in the description box, you can see there's another button here, because I know some of you have actually mentioned that you don't have this join button. But if you go in the description down here, you can click this red button at this point, and for the price of a coffee per week, you'll have access to the member section. The Bitcoin miners do come with a warning, and it's not for the faint-hearted. If I give you the example here, when Marathon Digital bottomed out at $3.11, it had an increase of around about 200% within a few weeks. But that was followed by a 46% correction. And then further up, we had another 34% correction. And in July, we had a bigger correction of around 64%. And recently, in January, we had a 53% correction. And currently, what we have is another correction, and that was 48%. So you can see that while Bitcoin has been having only 20% corrections, we've had 40 to 60% corrections just in the last year. But with that volatility also comes the opportunity for a leverage play, because in the last cycle, this is exactly what happened there. You had these big corrections all along the way before we eventually topped out. From the last halving back in May 2020, Marathon topped out at well over 120x. So while nobody can guarantee that, we do expect a very big move to the upside until the end of this current bull market. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. If you've got any comments, questions or suggestions, please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.